With the markets, you have the Sensex gaining close to 200 points as we speak. Nifty is firmly above 11,700. Broader markets relatively lackluster. They're actually, if you look at it, the small cap index is trading along the flat line. It's down by about just 0.1%. You have mid cap index also witnessing some pressure right now as we speak, down by about 0.4%. As far as sectoral performers are concerned, it's Nifty Auto and Nifty FMCG, the ones that are holding firmly in the green. Nifty Bank actually started out quite smartly, but you have some reversal in the trend seen there. You have the banking index, which has also turned negative. It's right now largely flat, but the bias is definitely towards the losers. Apart from that, some selling pressure witnessed on the Nifty Metal Index as well. It's down about 0.9%. Media names are also witnessing some pressure. Nifty IT is lackluster in trade. Nifty Realty top sectoral laggard down by about 1.1%. In fact, the advanced decline ratio also seems to have turned in favor of the declines in the last half hour or so. You have the likes of Bajaj Finance that's really putting pressure on the markets at this moment, down 4.5%. A heavyweight like Tata Motors is down 2% after that stellar up move seen in yesterday's session. Bajaj Finance once again down nearly 2%. You have the likes of BPCL, IndusInd Bank, Hindalco, Sunpharma, Coal India, Power Grid, JSW Steel, all of these names losing in the excess of 1% each. But on the flip side, you have some heavyweights gaining quite sharply. Reliance up 3.8%, Titan up 4.2%, ONGC up 3.5%. Ultratech Cement 2.5%, UPL is also up 2%. So these are the ones which are capping the downside on the market and keeping the markets largely in the green despite the advanced decline ratio being largely in favor of the losers at this minute. Moving on then to our guests, you have Kunal Bothra and Gaurang Shah joining us this morning. Thank you so much, gentlemen, for taking time out. Kunal, should we expect some kind of volatility or jitteriness in the market today? While, yes, the benchmarks are firmly positive and seem to be gaining quite okay, seem to be doing quite okay at this juncture. But given how the advanced decline ratio has changed, how financials are once again under pressure, is there anything to worry about?
So good morning, Karanya. Well, I think it's, I would say after US markets yesterday, what transpired yesterday in terms of, withholding the further stimulus post, the elections outcome, I think the markets will now go through a bit of a pause phase. So, there's too much of wind in the market, which has already been blowing. And I think now it could be probably, that the wind could be, sucked out and you might see the markets go into more of a standstill. Now, when that generally happens, when when the expectation is that the markets may probably not, give you wild, I would say volatile, gyrations of, 500 points on the upside and downside, assuming if that's the case. Then the larger trade which happens is to try and buy strength and sell weakness. And I think which is why you're seeing stocks like financial services name, the ones which have been laggards, so Shriram Transport, Piramal Enterprises, and so many of these other stocks which have been more of laggards. I think they're the ones which are witnessing profit booking. But then, you look at the other way around as well, that the markets are still giving plus points to, stocks like Reliance Industries and many of these other banking names as well. Bank Nifty, I think the last I saw was up 100 plus points as well. And many of these other individual stocks as well. ONGC is up today 4.5%. So when you have such kind of a name where the markets would probably give more favoritism to some few large cap names and then the other weaker sectors would go through a bit of a grind, then I believe that it's more of a churn which is happening, and this could probably typically indicate that the index could remain now in a bit of a range. So I think as short-term traders, you now have to position towards being more stock specific than what I think one was maybe a couple of weeks back.
Okay, thanks for that, Kunal. Hi, Gaurang. Let's get in your takes as well. And what's your high risk and low risk idea for today?
Hi, Varun. Morning to all of you all. So, well, the low risk ideas are in form of pharma and FMCG, if you will. And our sense on the markets, Varun, is that we have the curtain raiser for the second quarter earnings. I believe TCS will come out with numbers post-market, and then you'll have Wipro, Infosys, and for the next maybe about 25-30 odd days, you'll have all the others announcing their second quarter numbers. And if you have to reflect upon the commentary of some of the company stroke management sectorially, then the view is that second quarter should have a much better color compared to what we have seen in the first quarter, and this should possibly help the market to tide over that earlier hurdle that we saw of somewhere close to about 11,780 or 11,800, where we went and we came off quite a bit. So our view is that possibly by end of October you might be moving towards 12,000 on the Nifty spot if everything goes well. Secondly, you have the monetary policy, and of course you have the hearing from the Honorable Supreme Court as far as the interest on interest clarity is concerned. I hope we have the clear-cut verdict over there. So maybe for the next couple of days you may have some amount of profit booking, but all this should be looked as buying opportunity. And with that view, first stock is from the pharma universe. These are low risk ideas, fundamentally long term, 1 year, 1.5 year plus. So please bear that in mind. So Biocon is the stock. We in fact revisited this stock. I have spoken about this stock on this show itself. We have raised our targets to maybe about 550 on fallback of various launches that are likely to happen and the improvement in earnings. 550 should be the target on Biocon. And the second one is from in form of Marico. Reasonably lower raw material prices, strong brands like Parachute along with other power brands should help the earnings of this company. And on Marico, our long-term target stands at about 450. So these both are long-term ideas, and my humble request to your viewers, investors is that don't go and put all your money at one time. Start with a small amount and on corrections go on adding to the stock.
Okay, thanks for that, Gaurang. Kunal, coming back to you, what are your high risk and low risk ideas for today?
So, Varun, two stocks which I would want to recommend, one buy and one sell. The first one, I'll term it as more of a low risk trade or low risk idea. It's about Tata Power. Now, it's a very interesting chart over the last 6 months. The stock has gone through a stupendous recovery from 32 levels to 64. From 64, the stock came back to completing a mean reversion by touching those 50 levels as well, and now it's making a comeback again. So I think these are classical signs of trend where you see the first move being very strong and then a bit of a pause. I believe that this should be a stock which could see some substantial upside from current levels. Would suggest a buy on Tata Power, targets of 60 plus, and stop loss could be kept at 53.5. And the second would be a sell call. It's a sell on Shriram Transport. Now, as I was indicating that many of these financial services name, they could go through a bit of a grind. Shriram Transport in the last 1 week, 2 weeks, where many of these stocks in the markets recovered, the stock failed to break even above the 50-day moving average. And I think that's one sign of weakness. So today you're seeing the stock falling down, but I think overall the last 4-5 days the stock had been an underperformer. So would suggest a sell on Shriram Transport. Would term this as a high risk trade. Targets to be kept at 600 and stop loss at 652.
Okay, so a buy and a sell call coming in from Kunal. Moving on to our viewer queries. First up is an email from Shweta Verma from Mumbai. She says she's bought SBI Life shares during the IPO. Whether or not she should continue staying invested or she should book her profits and perhaps look at any other name is something that she would like to know from our experts. Kunal, coming to you first, SBI Life.
I think insurance space overall looks very good. We've been, I think answering the queries on insurance stocks since last few weeks. And I think I maintain my stance that I think all three key names in SBI Life, ICICI and HDFC Life, I think all three of them, they look very attractive on charts. Now, you may have certain set of stocks which may probably, have the leading effect and they could probably give you that slight bit of higher returns. But then I think if your time horizon is long term, then such kind of differentials, they generally tend to, ease out and cool off. So I believe in that regards, SBI Life is a good buy. It's a good space, the insurance space overall. And I think if you've bought at the IPO prices, then I believe, you should continue to hold on. Even if you have a, say a 6 month to 1 year kind of a time horizon, I would expect that the stock target should be kept closer to 1020, 1030 levels, the levels which it had hit in 2019 highs. So I think those could be the near-term targets for SBI Life.
Great. So Kunal, you seem quite upbeat on it. Gaurang, do you share Kunal's enthusiasm, and what's your overall take on an SBI Life?
So Varun, first a disclosure, we had maintained subscribe when the IPO hit the market of SBI Life. And now with the current situation and the new normal, as we all refer to with this COVID-19, we at Geojit believe that the run rate for insuring the uninsured is going to be much, much higher and much, much faster. And given the population we have and the number of people insured, I think there is a vast scope for all the three entities listed, SBI Life, HDFC Life and ICICI Prudential Life, to get a larger market share and thereby improve upon their run rate on the premiums are concerned. So I would, in fact, we wouldn't be surprised if the stock heads towards 1100 plus level over the next year and a half. So if you have time by your side, please stay invested.
So that's pretty clear from Gaurav as well. He's very positive on SBI Life since the IPO, and you can definitely get gains in this one, but you can also look at HDFC and ICICI. Our next query is now from Rishi Ahuja from Bangalore, who bought 500 shares of L&T Finance at 118 rupees per share. Should I average at the current market price or exit? Kunal, what would be your advice for Rishi?
It depends, completely on his time horizon. So if it's very, very, short term, and if he is looking out for some sort of triggers or some expectations on the short term, then I don't foresee that the stock could probably do wonders in the short term. I think the stock in the last 5-6 months of this recovery as well has just risen marginally from 45, 46 levels. It had jumped up to 70. Now it's consolidating at this 60, 65 mark or 60, 65 zone. So I think in that regards, the stock has not done extremely, high or given extremely high recovery in this last 6-7 months of price recovery. So I think in that regards, it's been an underperformer. But you know what? The historical trends for L&T Finance are still very strong. Now, long-term supports are at 45, 46 levels. 2016 as well, the stock had started a very strong rally from being at those 45 levels. In a matter of 1 or 2 years, the stock had rallied to 213. So those kind of price performance or price trends could probably happen for L&T Finance, but that would take a lot of time. So if time is by your side, and if you're wanting to hold the stock from long term, then I believe that you can hold. Maybe this may not be an average, a perfect price to average. I would believe that maybe the stock comes back to a 50-55 zone. I think that could be a slight better level for where you could look to average and then bring your cost price lower.
Karang, do you concur with Kunal's views on L&T Finance? It has been an underperformer in terms of stock move according to him, but in terms of fundamentals, what is your assessment? Does it make sense to add more?
So Karanya, from 118 purchase price, if the stock has to go to the levels where the investor has bought it, that means ineffective from current levels it has to double. And for that it has to come out with some stellar set of numbers and performance. That doesn't look possible in a short to medium term time horizon. Secondly, it comes from one of the best pedigree in terms of management, and we've been extremely positive on L&T Finance and holding for a pretty long period of time. My advice to the investor is, and of course, if the investor has gotten at 118, then definitely it must be a pretty old purchase. First of all, hold on to your investment, and if your pocket does allow, maybe 50% or more, you can definitely average. And I concur with Kunal's view that a zone of between 50 and 60, preferably sub 60 and closer to 50, would be a great comfort zone to average the stock. And when you average, also don't average 100%. Maybe at 55 you can average some, add another at 50 and thereof, so that you come down on your cost of investment. And with a longish time horizon, wouldn't be surprised if the stock goes towards 100, 110. But this will take some time, given the concerns and news flows that are an overhang on the NBFC sector.
Okay, thanks for that, Gaurang. So very little discrepancy among both our experts as far as L&T Finance is concerned. Both have a fairly optimistic view. On that note, thank you to you both. Pleasure getting your perspective as always. My colleague Jayesh was doing some interesting analysis on how the earnings season is expected to be. Let's listen into his special report.
TCS will kickstart the second quarter earnings today, and it promises to be an interesting and exciting earnings season that lies ahead of us. That is because most of the sectors that we track, except for financials, will most likely post sequential growth. However, if you have a look at the year-on-year comparison, that is likely to be subdued for most of the sectors. Let me run you through one by one by the parameters that we are tracking. Let's start off with the revenue segment. On a quarter-on-quarter basis, 8 sectors out of 10 are likely to post revenue growth, which will be led by the consumer discretionary space. And if you have a look at the YOY growth, 7 sectors are likely to post a decline on a revenue basis, which will be led by the utilities, real estate, and the energy space as well. Moving on to the net profit parameter, sequentially 6 sectors out of 10 are likely to post profit advance, which will be led by the materials as well as the real estate space. And on a year-on-year comparison, 5 sectors out of 10 are likely to post profit decline, which will be led by industrials, materials, real estate, as well as utilities. Operational performance, if you have a look at that, quarter on quarter, 8 out of 10 sectors are likely to post EBITDA growth, which will be led by the consumer discretionary and industrial space, while on a YOY basis, 7 sectors are likely to post EBITDA decline, which will be led by consumer discretionary, industrials, as well as the communications pack. But I tell you what, there are 3 sectors that you have to watch out for closely. One is the IT pack, because across the parameters that we track and the time frames that we track, it is likely to post growth on all fronts. Similar is the case for the consumer staples, or the FMCG pack as it is popularly called. And also watch out for the healthcare sectors because it is likely to post growth on all parameters except for an EBITDA quarter on quarter growth that we have this time around.
All right, Jayesh, thanks for highlighting those trends for us. Slipping into a break here, plenty more on the other side. Stay tuned.
One of the biggest mega trends in this pandemic has been the adoption of technology by companies. This has surely helped Indian IT companies increase the pie that they can tap into. So much so, the top Indian IT players are sounding upbeat on their commentary on demand, especially on the digital and automation front. Businesses want to adopt technology to improve productivity, generate revenues, lower costs, and get the competitive advantage. The stock market benchmark for the Indian IT sector, the NIFTY IT index, has in fact hit record highs, and good times, it seems, are here to stay. There is hope that Indian IT companies are set for a re-rating, with some Indian IT companies already confidently declaring that their revenues and margins are going to get higher in the days to come. If you want to ride this momentum, look no further. IT ETF should be your vehicle of choice because it invests in India's top 10 IT companies in one go. Happy investing.
Hello, welcome back to Buy Now, Sell Now. Let's quickly address the BNSN stock cloud for this morning, and we have 10 stocks that we're flagging off to you for various reasons. The first one we have is Titan on the back of that Q2 update which just came out this morning. Then we have Reliance Industries gaining away smartly on the back of ADIA investing another 5,000 crore in the retail venture. We have Bajaj Finance as well this morning with the strong Q2 update coming out of there and some accelerated provisioning. We have Dixon Technologies on the back of the phone manufacturing related developments and a new scheme that the government may be introducing soon. We have Solara Active and Divi's Labs on 2 big upgrades from Macquarie, rather initiations I should say. We then have Bharat Forge as well, that's been flagged off by brokerages this morning. Tata Motors also in the limelight, finally cooling off after that 2-day rally we've seen. Balrampur Chini is in there as well because sugar prices may be subject to change shortly. We'll see where the MSP prices and how the agricultural commentary shapes up.
stocks we wanted to flag off that you need to keep on your radar today. But let's dig deeper into why some of these names are flying in trade. Starting with the Titan, top gainer on the benchmark index. Vinny standing by to give us an update about their Q2 performance and what is it that the management is saying.
Came out with its Q2 FY21 update, and the company is talking about returning to normalcy and how the process is going on. They did say it's going on quite well and they are slowly recovering to normalcy and coming back to normalcy. The process is on. Now overall, they spoke about the consumer sentiment. They said that consumers seem to be accepting what is the new normal, and that they are seeing increased footfalls overall in the malls as well, in the stores as well. Though in malls the footfall is relatively lower compared to in the stores, but surely some signs of improvement and recovery compared to last quarter. So some positive sign coming in here for the company. Now overall, let's talk about the jewelry segment, which is a very important segment and accounts to most of their revenues. That saw a recovery of 98% in Q2, and this recovery is excluding the raw gold sales. So overall, walk-ins have improved and conversion with improving conversion rates. Overall recovery in the metros also has been improving gradually, which was impacted the most, while non-metro cities have improved substantially is what the companies have said. Studded ratio is yet to recover to the previous levels, and so we could expect the studded ratio still to be lower compared to previous quarters and previous levels, while wedding jewelry has done particularly well for the company in Q2. Overall, the company has continued to sell the excess gold inventory they had, and this quarter they have sold around 390 crores of this excess gold inventory. Now moving on to the watches segment, that has recovered 55% during Q2. E-commerce channel has been leading the growth for the company, while trade channels are still posing certain challenges due to destocking, and work from home culture also is something that has impacted the company, and overall the LFS large format channels have not done quite well for the company. Eyewear segment again has recovered 58% in Q2, and in the month of September both watches and eyewear segment have recovered as much as around 70%. So that is something we're going to watch out for, and all in all a better set of numbers compared to Q1.
Thanks, Vinny, for that. Meanwhile, Titan up a solid 5%. Let's get you, in the meanwhile, an exclusive interaction. My colleague Chandra is in conversation with Shivender Singh of NASSCOM. Let's cut across to that.
Right. Shivendra, what are the next steps going to be? This is coming just weeks before the US presidential elections. As you said, it's an interim final rule. The wages come into effect immediately. The other rules come into effect in 60 days. What recourse do you really have at this point? Is this something that the IT companies, other technology companies have to just grin and bear with for now?
So it's not just Indian IT companies, it's overall tech companies. I'm just talking from that perspective. So the current scenario, as you know, is that this is probably going to also increase the level of denials, which has already shot up from 6% in 2015 to about 30%. So it's making things very, very difficult. Now, I did say that, if it's coming as an interim final rule, then it is, probably making itself vulnerable to legal challenges. So this is about a 157-page document which came in late last night. So obviously, along with us, other associations are also going to have a deep assessment of the same. But given the fact that we've seen precedents in the past, let's look at March and May, where you had the IT Serve Alliance and USIS case, and where USIS made a settlement. That were exactly on this in terms of the employer-employee relationship, third-party placement, and they had agreed to reverse that. So, there is a legal precedence where the statutory authority, of the agency to be able to do these changes were questioned successfully, and probably, we will see that, moving forward in that way, as we move forward.
Right. And Shivendra, while I understand companies have significantly ramped up localization efforts in the US, I'm talking about the Indian companies now, their localization efforts trend anywhere between 60 to 70%. But this is going to have a huge impact on those whose visas are coming up for pensions this year. So as you mentioned, the denials are likely to go up. What impact is this likely to have on business continuity, perhaps new projects that these companies were pinning hopes on?
You're absolutely correct. The localization efforts have shot up to a great extent. But nonetheless, non-immigrant high-skilled visa workers play a very critical role in bridging the skills gap on one hand. And the second part is when you create teams, you create teams of, let's say, 5 people, you'll have 2 people who have these specialized skills and they come in, and then you have 3 local employees. What will happen is that, this whole thing gets altered. So even the local employment, which is getting generated, is also dependent to some extent on the non-visas, because at the end of the day, all the skill sets need to be, bridged in together. So that is, is going to be a challenge as well, especially at a time when, to make the American economy more competitive and grow back, this is very, very critical. So we will see this as a huge challenge.
Right. Finally, before I wind up, any other changes or rules that you expect in the coming weeks ahead of the elections? I mean, they've tried to clamp down on basically every part of this H1 visa, but is there more that we should be prepared for?
I hope not, first and all. But if you look at some of them, we had the ban on H1B visas till the 31st of December. Thankfully, there have been exemptions based on, CISA guidance in terms of the workers, which is what our demand was, and thankfully that was accepted. Then we've had, changes to, other areas as well. So we hope that, there are no further changes. The industry requires stability and predictability, in order for them to, make America more competitive, work with more than 75% of the Fortune 500 companies, most of them being American companies. And what we seek is stability and predictability at a time when global talent, securing them is not the easiest thing for any country.
Right.
Thank you.
Okay, moving on then, let's talk about some more stocks that are buzzing in trade. You have big boy Reliance Industries, which has announced yet another investment by an overseas entity in its retail business. This time around, it's ADIA, Abu Dhabi Investment Authority, that's going to be investing 5,512 crores in Reliance Retail Ventures for a 1.2% equity stake. Like the other recent transactions, the investment values RIL subsidiary at a pre-money equity value of 4,285 crore rupees. Let's bring on board my colleague Ajay. He's been tracking all the Reliance-led investments and transactions quite closely. Let's take it across to him.
Well, that's correct. The checks just keep on flowing, and this time it's Abu Dhabi Investment Authority, which has actually planned to put around 5,500 crore in Reliance Retail. Now, this actually joins the checks of Mubadala, TPG, Silver Lake, so many of them. If you look at it, KKR, General Atlantic, all of them actually come in, and all of this has happened in the matter of 4 weeks. The valuation for this one is also happening at 4.28 lakh crore thereabout, because that's what's the valuation picture is emerging at. Almost 38,000 crore have come in last 4 weeks alone in Reliance Retail. Now, retail is actually cementing its position because of the technology backbone. 640 million footfalls coming in, and now after this acquisition, which they recently did of the Future Group, we're talking about 12,000 stores across the country. So they are becoming a unique omni-channel model of brick and mortar as well as an online. Online, of course, kicked off big time during this pandemic, and brick and mortar retail got hit. But electronics, grocery, etc., clearly flying off the shelf even during the pandemic because of JioMart, etc. So it's a unique integrated retail play which these institutional funds are very interested. It is scalable. In fact, if you read some of the recent brokerage reports, which are assigning anywhere between 650 to 700 rupees a share as far as sum of part valuation is concerned for Reliance Retail, talks about big numbers in the next 3-4 years, and probably that is what is bringing such high quality marquee investors. So it's good news for shareholders. It will be interesting to see how stock reacts in trade. Last couple of days, perhaps bulk of the positive news is already getting built in, and the way Reliance Jio platform investments, the street used to react, the same kind of intensity in stock reaction is not being observed. But clearly, fundamentally, it's very good, and the checks keep on flowing. So good news for shareholders.
Okay, thanks for that, Ajay. Stocks definitely seems to be reacting positively to this news today. But switching gears a little bit to a different sector of the market, the new ethanol season begins on 1st December 2020, and ET now learns that the government is planning a bigger than usual hike in the procurement price. So far, ethanol prices have been increased routinely by less than ₹1 per litre. The idea is to boost domestic ethanol production and encourage sugar mills to divert more sugarcane for this purpose. Karishma Asudani joins us with that story.
Well, what I'm picking up is that Oil Ministry currently is drafting a proposal that is to be submitted to Cabinet by the end of this month, where they're discussing to increase the procurement price of ethanol by ₹3 per litre. Well, now we got to understand that this is usually procedural, has been happening every year, because this gives, of course, boost not only to the ethanol blending process, but also to the sugar companies. But this year, it's going to be a bit higher than the usual ones because of the change in sugarcane FRP, and increase by ₹10 to that of about 285 per quintal that was released by the government in the month of August. Well, this definitely is going to scale up the whole idea and focus on getting more and more ethanol from sugar, because government is also, concentrating on reducing sugar exports by 20% year on year. And for this, as and when, ethanol blending increases, it will definitely be good not only for the process, but also for the sugar companies. In fact, a tripartite agreement has been already under works, where more and more ethanol blending target of 10% is being focused on to achieve, in order to achieve that by 2022. So we are expecting this announcement to come in around the month end of October or early November, because the ethanol season begins from December 1. That is when OMCs, start supplying it, and contracts for it are given once the price announcement and cabinet clearance is given.
Karishma, time for a quick break here and Buy Now, Sell Now. We'll be back shortly.
Welcome back. You're still watching Buy Now, Sell Now, and before we get to the last segment of the show, we want to just flag off all the winners who replied to our quiz of the day. Earlier today, we had tweeted a question for all our followers and viewers, asking which tyre maker has the highest TTM PAT growth. The options were Apollo Tyres, MRF, CEAT and Balkrishna Industries. And there you have it. The right answer is Balkrishna Industries. We have a list of our quiz champions as well. Firstly, there's Prachi Tripathi, there's Jayshan and Naresh. All of the three of them had replied to us quite quickly and correctly. Thank you so much for everyone else for participating in the quiz. Keep writing to us, and we'll keep asking you and getting you more exciting and insightful quizzes every morning on our Twitter handle.
Okay. We have Karishma now joining in for a special link on the latest possible natural gas reforms. Over to you, Karishma.
Well, right. Cabinet, we were discussing that today's cabinet meet, which is set to end at around 12 o'clock, is going to take up certain important issues. What we are picking up is that cabinet is going to concentrate on three major focus areas on its agenda. One is, of course, they've been planning to work on certain revised reforms for Kolkata Metro. And second, like you pointed out, that they may propose and removing control or decontrolling domestic natural gas prices in tranches. What we are picking up from sources is that Cabinet will likely take up some kind of reforms in marketing and pricing of natural gas, where a part of gas prices could be excluded from the price control and remaining, of course, after some time, that is in tranches. There could be a price control on gas prices for a few important sectors. This will definitely play out to be good for the oil companies because, gas is supplied from domestic fields of major oil companies like that of ONGC, IL, and, coming out of this kind of control of prices will prove beneficial to them. So we're expecting likely this is what the agenda says.
Karishma, thanks much for joining us with that detail. Let's move right on and get you an important insight, an important voice of the day. We spoke to market veteran Saurabh Mukherjee to understand his top picks, the ideas that could help you get rich. Here's what he said.
Just like Nestle dominates baby milk powder and Asian Paints dominates paints, similarly, say Garware Technical Fibers dominates the global market for commercial fishing nets. Right? They have, I think, more than 50% market share globally in commercial fishing nets. Commercial fishing nets are an essential commodity for Norwegian fishermen and Japanese fishermen and Australian fishermen. And Garware Technical Fibers is their chosen vendor. Right? So if you buy the dominance of Garware Technical Fibers, and there's a whole bunch of reasons why over the last 20 years, Vayu Garware from his Pune operation has been able to build this fabulous franchise. But if you buy the underlying barriers to entry that Vayu Garware and his firm have built, then obviously as the world recovers from the pandemic and our country also recovers from the pandemic, you'll see a nice story playing out here where a market leader continues to chug out 20-25% earnings growth with return on capital significantly above cost of capital. That throws off cash flow, which Garware puts back into the business and carries on growing this niche market leader. So we've discussed on your program several times GMM Pfaudler, so I don't want to repeat that again because it's a story that I think your viewers now understood very well. But a Garware Technical Fibers or an Alkyl Amines, these are all companies with dominant, by dominant I mean 50, 60, 70, 80% market share in niche industries, and hence they behave very similar to an Asian Paints or a Nestle. They give you steady compounding over long periods of time, and that will be especially relevant as the world and India comes out of COVID and the economic recovery proceeds apace.
There are a couple of things which I've learned is you need to be away from the pack. Sometimes consensus is not necessarily right. And if there is consensus and if everybody is on the same side, there's no trade. The second part of the story is that I think you need to be careful that the horizon that we are in now, or the environment that we are in, your horizons have to be a bit longer. I heard you say that you can't forecast weather. Nobody can, but everybody tries. The fact is you've got to stop doing that and think that I buy merits of a corporation and believe that earnings will flow through and businesses will kind of survive through turbulence. And, in my opinion, it's very difficult to, get money quick. But last but not the least, it's possibly not so difficult to become rich, but it's very difficult to stay rich.
All right, on that note, completely out of time here on Buy Now, Sell Now. Thank you so much for tuning in. Keep it with ET Now. Markets at noon coming up next.